Well, 10-year Treasury futures creep lower most of the day, actually trading in a 4 basis point range. Hard to believe it as we get into the afternoon. Traders so desperately looking for guidance with all the cross currents going on within the market, and 10-year futures basically been in a very tight range for a very long time. Today, the opened yielding 2.654. High yield today was 2.685 and a low yield of 2.643. So just a little bit over a 4 basis point range today. 5-day basis performance a little bit paltry, down 2 basis points. 1 month basis down 4 basis points. And year to date, 10-year Treasury futures implied yield down 2 basis points. Today, a lot of economic data that came out in the U.S., most of it mixed. Inflation expectations definitely lower on all of it. Import prices were down, and even taking out oil, ex-oil, all subcomponents of the import prices were lower, and actually the lowest we've seen since January of 2015. Positive surprise, on the other hand, from the Empire Manufacturing Survey came out at 8.8 versus a consensus estimate of 7.0. Lastly, University of Michigan beats, yet the forward inflation expectations from that survey were garnered to be lower. So 10s, as most people realize, are getting dangerously close to a resistance level, seeing that we haven't seen yields in the lower 2 handle since early of 2018. A lot of people continue to think that with inflation expectations going lower, we're going to see higher bond prices and lower yields. We've got a long weekend. Monday is a holiday. A lot to think about and to consider, especially with economic data. I think what's really important to look forward to is the January minutes from the FOMC, and especially addressing just the severity of the abrupt about face with regards to FOMC policy, Fed policy. Traders also want to know is how is patience and flexibility actually going to play out in 2019? Lastly, but not leastly, traders want to know the mechanism of the balance sheet runoff, and that's a big surprise to most. And it seems like right now most people are guessing balance sheet runoff will end this year somewhere between 3.5 and 4.